Simple, really. Jerome Powell is the cookie monster. It's as simple as that. See, the cookie monster, when it has a bunch of cookies in front of him, can't help himself, just eats all the cookies. And then, after, everybody goes to the cookie monster and goes, hey, why'd you eat all the cookies like that? You ate them in half a second. Just gobbled all the cookies up. Everybody does that, and then the cookie monster kind of looks back with a bunch of cookies all over his face. In 2023, I'm going to give you back a chocolate chip. And all the markets go haywire. All right. I'm joking, but I'm kind of serious at the same time. So, that's just the way I think of it. How did this little event of raising the interest rate just a 0.5% up in 2 years from now, potentially, actually make the stock market pull back, make the dollar index go up, and make precious metals crash? Pretty wild. It's pretty wild. So I know the Cookie Monster thing is a bit of a joke, but is it? I want to go into detail in this video a bit more about inflation, a bit more about what rising the interest rate even means and what that even does, and just kind of what I think of it all myself and how I'm preparing for the future. So the first thing I want to say is the Fed is basically designed to have inflation. They believe that it is healthy to have a certain inflation rate. The number that we're told, I believe it's the Milton Friedman model, is 2%. 2%, and that's supposed to make people, it kind of bothers me because it's supposed to incentivize people to not have a savings. You heard that right. It's supposed to incentivize people to not have a savings and to spend more of their money. So the goal is to get the common American to spend their money and not save it. That's the goal, pretty much, of the Fed, in my personal opinion. Disclaimer. That's just wild to me in the first place. So what does raising the interest rate in 2023, supposedly in 2 years, just raising it, not even 1%, about 0.5%, they're going to be supposedly raising it. It basically means that they have been, for this entire time that the interest rate was at zero, giving the commercial banks loans at 0%, which basically means the banks get as much money as they want whenever they want for 0% from the Fed. I didn't make this up. They did. All right. If you think it's crazy, you're right. I didn't make it up. I'm just trying to help people understand it. The banks get loans from the Fed at 0%. They have to have a certain amount of money in their deposits, in their actual bank account at the end of the day. And what they'll do is when they don't have enough, they will borrow more from the Fed. And because the borrowing is at 0%, they can basically do whatever they want at this point. And this whole system of money movements is just absolute insanity. One day I will break it down on a whiteboard and just kind of go through detail how the Treasury works into it, how bonds work into it, how basically the commercial banks are getting free loans. And now, by them just raising this interest rate a minute, tiny little bit, just a little bit, potentially in the future, just destabilizes everything. It's like, okay, what it means is that the banks have to pay a tiny interest rate for capital. I just got done talking with a banker, and I can't even get a loan for under 8% from them. If you're going to get a house loan, the reason the house loans have been a little bit lower, they're still not free. The banks get them for free. They get it at 0%. They're low, but they're still not free. So right now, the home loans are a little bit lower than average, 4 or 5% on these home loans. Sometimes you can get even maybe a little bit lower than that, depending on how much you qualify for and how much your down deposit is. The reason for that is the bank is getting the loans for free. The interest rate is at 0 for the banks. And then when you go and you store your money at these banks, they give you next to nothing in interest, while they're getting free loans at their heart's desire at 0%. There really is no solution for this other than going to what this bar of silver right here represents. I chose this specific bar because it's a cool bar and it's eye candy. And yeah. But other than that, it's a 1951 New York assay bar, and it's actually from the New York assay office. You had to redeem silver certificates to get this huge hunk of silver. I believe it is 1,061 troy ounces of silver from the New York assay office. This is actually a government-issued silver block from back then. Now it's a bit of a historical collectible piece in my personal collection, but I like to bring it out from time to time and show it off. And if you look on my, I posted some pictures of this on my Instagram. I think you have to scroll down a little bit on my Instagram, but I did post pictures of my 2 consecutive New York assay bars. If you wanted to see closer pictures of the hallmarks and everything with the eagle and all of that, the stamping on this thing is just super cool. I think the stamp's right here, yeah. Super, super cool hallmark on this. But this was back when our money was sound money. You couldn't just print at will because the money was actually back to silver and gold. Now, because of this system that's been put into place, we have all of this nonsense in a way where if you raise the interest rate potentially in the future, if the Cookie Monster gives back a chocolate chip years ahead and says, I ate the cookies right now. I ate a lot of these cookies right now. Like there was a whole pile of like, I don't know, 16 trillion, 15 trillion, 14 trillion cookies. I ate them all. And I'm going to give back a few chocolate chips in 2 years, maybe. Everything, stock markets go down, silver's going down, gold's going down. Everything just is going all over the place based off of Jerome Powell's statement that he's going to give back a couple chocolate chips 2 years in the future. It even strengthened the dollar, supposedly. Now, I want to go into my thesis on what I think of all of this, and I hope that I like to kind of simplify it and joke around a little bit, but I hope you know how serious I take this issue. It's just my way of learning, I guess. I wasn't that good in school. I didn't learn that well. My grammar's getting better, you see. But I hope that it simplifies it just a little bit for you. And what I think is going to happen next is just because the price of silver is here doesn't mean a dealer is going to sell it for here. Just because they say the price of silver is down at, where is it, 26 right now, doesn't mean that you at home, who has been stacking and paying premiums likely like I have and everybody else has, is going to be selling it for that really low spot price. If anything, it means that people are going to be looking for it and looking to buy it with both hands. That's my personal opinion, not financial advice. Disclaimer. If that situation happens, there's going to be a major disconnect between the physical precious metals and what we see on the ticker there. Just because the dollar is supposedly strengthening, because the dollar index has somehow managed to go back up over 92 when it was just breaking under 90 into 88, 89 levels not too long ago before all of this. When the markets act irrational, that's the best time to really stick to your thesis. In my personal experience, back when all of this first started and silver plummeted down to 12, people were thinking this is the end of silver. But I was buying with both hands because I don't even think they can mine it for lower than this. To me, in my personal opinion, not financial advice, at that time, it seemed like a guarantee. So I went in big in silver at that time. Now looking back on it, the stock market also pumped big, and I could have made probably more money in the stock market during that pump. But silver didn't do too bad. Well over 100% gain from the beginning of all that, even after this bit of a pullback here. The reason I like silver so much is because you have the industrial aspect to it, and it's been a monetary metal, and this is why I pulled out this exact silver block right here, because this is from 1951, prior to dropping off the gold standard in 1971. This is actually 20 years prior to dropping off the gold standard. So this is back when the money was sound. The reason the term sound money was around, I know that I'm a fan of Bitcoin. You guys know I'm a fan of Bitcoin. I know you might not be a fan of Bitcoin. Silver's first in my portfolio, then Bitcoin after silver. But the reason I like Bitcoin so much is we'll do that in a different video maybe, but or actually we'll talk about it a little bit in this video too. But the reason people in the Bitcoin world, what I was trying to say is they call Bitcoin sound money because it's supposedly a digital gold. It's not sound money by the actual by the definition, maybe, but the reason the term for sound money was because when you put a silver block or you put a silver coin on the table, it made that beautiful hum that silver makes. That's what the term sound money comes from, is laying down a $20 St. Gaudens on the table, or laying down a $20 Liberty, $20 gold coin, ounce of gold on a counter. You had sound money. That was back before they could just inflate money at will and do whatever they want. Now we have just this very wild situation where there's an incentive to have these citizens not want to save the capital. Why do the commercial banks not pay interest rates? Because there is an incentive to make the population want to spend their money. It's actually like it's what they want. They say that it is a good thing to have inflation, and that is because what's crazy is when you think about it in a way, you want a sound money where people want to spend their money, but they also want to save their money. When somebody is working for their money month over month over month, you don't want to have a situation where they're saving something that is melting away. You don't want somebody working for ice cubes that are slowly melting away month after month after month. It's just not right. So inflation, what's going on is basically you have a situation where you're being paid in a currency that is proven to be devaluing over time. What inflation is how fast is that currency going to devalue? My argument is, why do your savings have to devalue at all? Why has it become a good thing for individuals' savings to be melting away year after year after year? What's even more astonishing to me is that the inflation rate that the Fed has been saying lately is going up to the tune of 1% every other time they're speaking. It was first in the low twos not too long ago, and then just a few months later, now they're talking about it being 3.4. So it's going up, but it's not just that their changes are happening in a monthly period when this is supposed to be an annual projection. It's supposed to be 3.4% annually. In my personal opinion, it's well over 5%, maybe even 10%. When we actually put the real statistics into the equation, what gas price really is, what lumber price really is, what the price of real estate is really going to. The other thing I wanted to touch on is the possibility of getting rid of the 1031 exchange. There's this movement, it seems, to try to get money from the rich. I understand where this movement is coming from when you think about the few, like you see the Jeff Bezos, you see the Elon Musk, you see the people that have billions and billions and billions of dollars, and you think to yourself in a very quick way and you go, well, we got to tax the rich. They have too much of the money. Well, their money is really tied up in stock. I mean, if you look at Elon Musk, he doesn't really have billions and billions of dollars sitting in a bank account. It's tied up in stock. It's tied up in a certain asset of his, which is his Tesla stock and his SpaceX stock, and that is where the money is tied up. So when you think about taxing the rich, that's not really the way you do it by getting rid of the 1031 exchange. The irony of it all is the 1031 exchange worked for the rich, and that's why they're rich now. If you take out the 1031 exchange, which the 1031 exchange basically means if I have this building, this small building, and I bought it for $100,000. 5 years down the line, this building's now worth $1 million somehow, right? And it could happen. You never know. Maybe more likely is $500K. You sell this building that you bought for $100,000 for $1 million. Now you can afford a $1 million building. You go and you buy a $1 million building. You now didn't have to pay any taxes on that $900,000 gain. That's how you got your money with a 1031 exchange, and you keep it. The 1031 exchange, for some reason, isn't really taught in schools, but it really is a tool for the middle class and the poor to work their way up and be able to retain their money, to retain their capital. It's actually something that helps the little guy and the little guys and women out there. It's troubling to me, because that system is really in place for the middle class and the poor to be able to move up the ladder. But now there's this movement to get rid of the 1031 exchange, to start overtaxing when somebody passes away. So now you're saving and saving all of this money, and you're hoping to pass it on to the next generation, and you're taxed again after you've been taxed. You got taxed by when you bought stuff through sales tax. You got taxed when you made any money through an income tax. Your state taxed you on top of that. And you somehow, with all the odds against you, you managed to put some money in a savings for your children when you pass away. And they want to increase the tax on when you pass away. It's like, it's wild to me. So the options are very limited on where to store your capital. The options are very limited on how to keep your ice cube frozen. So knowing all of this, and I hope I'm not all over the place. I tend to ramble a little bit. I try to tie it all together somehow. It makes me more bullish than ever on silver. It makes me more bullish than ever on Bitcoin, because these are things that actually cannot be manipulated. They can try. They can try to short it and short it and short it, and they're trying to do that right now, and they've been doing that for a very long time. The banks, though, if the Fed right now is trying to raise the interest rates on the banks are going to increase the interest rate on the loans that they give out and make loans harder to get. On top of that, you're going to have a situation where inflation is going up at the same time. It seems like a really rough scenario for the average working folk of the country. It seems for a very terrible situation here. And their only options on where to park their capital is precious metals, collectibles, real estate, getting in that real estate before they get rid of the 1031 exchange. The other thing about the 1031 exchange is the rich already succeeded at it. Now the rich have assets, and they will likely not sell their assets now. If they get rid of the 1031 exchange and they have to, when they sell a property, they're going to have to pay this huge tax that's owed. If they get rid of it, they're not going to sell the building. And everyone's rent is going to go up because they're going to want to make cash flow off of that building because they can't make any more money off of moving that money to the next building. Has anybody thought about that? Hey, Powell, hey, genius over there, Powell, you thought about that? My solution to this would be give a fair interest rate on the monopoly money that we already have. If you want to have a society running on money that can just be printed at will, if you want a society running when they just can give out interest, I mean, how astounding is it that the interest rate is for the banks from the Fed is like 0.5%? If I could get $10 million at 0.5% right now, I would be, I don't even know where to start. If I could get an extra million at 0.5% right now, I'm pretty sure I would take every single dollar I could get at 0.5% annual. It's like you are essentially saying, hey, banks, get rich. Here you go. And oh, by the way, you know, since we really gave you a good hand, since we really helped you out and we gave you an extremely low interest rate, and we allow you and your buddies to balance each other's checkbooks and be able to do all of this crazy money movement around, and you can borrow from us for next to nothing, maybe you should give them a fair interest rate. Maybe you should do that, you know, JP Morgan, Wells Fargo, Bank of America. Maybe you should give the citizens who hold their savings with you a fair interest rate to at least keep their ice cube frozen. And then you could just imagine all these CEOs in a room like, how about 0.000001%? Will that work for them? Perfect. Right on, Jamie Dimon. Perfect. Great idea. You don't think they deserve at least 1%? Inflation's they said it's 3.4%. Nah, don't even give them a penny on the dollar. Don't even give them a penny on the dollar. But us, if you don't want to give us the loan at 0.5% or 0%, better yet, like you have been, then we're just going to sell off in the stock market. We're going to do all kinds of mayhem. But them, I don't want to give them a penny on the dollar. It's very odd. It's very odd, the whole scenario here. And when I see it, the obvious sign is if inflation seems to be only picking up and they're saying it's transitory, I don't believe them. Because why don't I believe them? It's been changing. Every time they speak, it goes up a little bit, and it was supposed to not. Now you have a situation where the CPI has gone up over 5%. Now you have a situation where it's gone from 2% to 3.4% in a matter of months. Now what happens on the next one? Are the people that are still thinking that this is going to be a transitory thing when they say 5% next time they speak a few months down the line? Or is it still going to be transitory then? And before you know it, these numbers get, astounding. If you get an inflation rate at, say, 5-10%, you have a real problem. It's a serious problem at that point. So maybe at 3.4, people aren't looking at it as serious. I happen to think that it's just a matter of time before this gets very, very serious. So overall, I guess what this whole video was to do is to talk about protecting the savings that you have. If you're working month to month right now and you are taking your capital into dollars, put that capital in places where it will actually be safe from inflation. And just like I said, regardless if silver price is going down, the premium is still going to be there. And if it continues to go down, it's going to get to a point where just because they say the price of silver is down at 26 doesn't mean that you and I are going to be willing to sell our silver at 26. As a matter of fact, we're not. We want a big premium. So if that continues to happen, maybe we see an even larger detachment. And we see a situation where physical silver is going for well over 30, but spot price is down at 23. That could be a situation in the near future where there's just this major disconnect. We've seen it in the past, and I think it's still happening right now. So that's something to be thinking about, and I'm unwavered on my thesis of sound money. In this time, I don't want to be holding dollars right now. I don't want to be having my money in a bank where it's designed for me to spend my money. Just like I talked about in this beginning of this video, the actual design of this system is to get the citizens to spend their money. It's wild. It's wild. So I hope this video helped you. I'm sure I rambled quite a bit, but overall it was just to kind of talk about what I believe this Fed interest rate even means, which it's very simple. It's just they ate a lot of cookies now, and now they're going to put a couple cookies back, or a couple chocolate chips back 2 years in the future. And they're going to do that by actually charging the bank something, which they don't charge them anything right now. And the truth is, they ate a lot of cookies, and this is going to do nothing. It does nothing. All that this does, I guess this is the last point I wanted to talk about in this video. All that this does is cost more for the citizens. It actually damages the citizens more than anybody. So the banks start selling their stock positions because they can't leverage as much. They can't get it. The cost of capital is getting higher. So they're going to sell their stocks. That's what we're seeing in the stock market. On top of that, they're going to charge you a higher interest rate when you want a higher an interest rate for your house, when you're trying to get a home loan. If you want a business loan, whatever loan you're going to be trying to get from the bank, it's going to be harder to qualify, and it's going to be more expensive to get this loan. And that's from them raising the interest rate. So that's the situation that it is. The bank doesn't take this on the chin. They're going to pass it on to you and I. That's what happens in this situation. On top of that, you have a situation where because of them actually making a decision rather than just keeping it at zero, despite it's still at zero right now, it causes all this instability and all this turmoil in the marketplaces. And that actually, to be honest, is a place where I thrive. I actually it's not that I enjoy it, but when you're in a situation where there's irrational markets, but you can maintain a rational head, that's your advantage. The dollar index going up right now, that's irrational. Really, my argument with all fiat currencies is that there is a situation where Bitcoin, if that actually becomes, say, the reserve asset currency, I call it an asset, but the thing is El Salvador is calling it a currency. So if all South America starts adopting it as a currency, well, then you have a situation where you have a currency. It's still an asset. It's like an asset currency. It's a hybrid. If you have that situation where that becomes a bit of a reserve currency asset, then you have a bit of checks and balances. And that's why I think Bitcoin has had such a big jump over the last few years. It's because people are looking for a safe haven that won't be damaged by the crazy manipulations and market movements of the Fed and of their own central banks. That's why we're seeing these movements in Bitcoin. And I think we're going to see that movement in silver soon enough. In the near term, there's artificial suppression, there's artificial shorting, stuff like that going on right now, and I'm not buying it. I think that if anything, it's a major buying opportunity, and I stand by that. So we will see what happens with precious metals in the future, but overall, I think the raising of interest rates only hurts the entire economy. It just makes it harder to get capital for everyone. But the problem is keeping it at zero is also terrible for the economy because the banks are greedy. If they kept it at zero, but the banks actually felt guilty like they should and said, we should probably give them like 10% on their capital and interest per year, at least 5%, to at least keep their ice cube frozen and give them just a little bit more ice cubes on there. When I say ice cube, I mean the dollar. But they don't do that. When you give the banks more, they just take more. You give them an inch, they take a mile at the banks. So that's what happens. The Fed goes, here's an inch, we take a mile. They might lower the loan rate a little bit on the house, but they still charge a hefty percentage compared to them getting it for free at will. Basically, they're just given a free 4 or 5% when they write these home loans against an asset. So they have collateral, no risk, and the capital to get the loan was free. Sign me up for that one. Get $1 million house, give them $1 million loan. I make 4% on it annually. I'm making 40 grand on this money that cost me zero. And if they don't make the payment, I take the house. Like, what an unbelievable gig these commercial banks get. Nobody's talking about this. Elizabeth Warren and all of these saviors in the Senate and everything. It's like, when are you guys going to talk about just giving the citizens a fair interest rate from these greedy banks? When is it going to happen? But no, they want to talk about, we should just give away more money and make the student loans go down. No, maybe we should make the loans interest rate go down. They still got to pay back their debt. They knew what they were taking. But maybe the fact that it's a very ridiculous interest rate on the capital that they got for their student loans, maybe that's the problem. The bank is the problem. The interest rates are the problem. They get the good interest rates. We get the bad end of the stick with the interest rates. It's about time that they change that and do something about that at the Fed. Nobody cares about them raising this interest rate, the little 5%. It doesn't do anything. What would do something is if they actually said, okay, we're going to give you a lot of capital at the commercial banks, but you got to start treating the citizens right, Jamie Dimon. Just my personal opinion. Could be completely wrong in this video. Disclaimer, everything that I say in this video could be completely wrong. Could be just my opinion. Disclaimer, Jamie Dimon. Anyway, that's all that I have to say about this video. You can tell it bothers me. It gets me a little heated because the more I research on this, the more just ridiculous it seems, the whole thing. And I wanted to just impromptu shoot this video. That's a 30-minute timer, so I probably have ran about 30 minutes now. And yeah, that's the video. Thank you all so much for watching. If you do enjoy this content, please do smash the like button. It really does help with the YouTube algorithm. I know I say it all the time, but at least I'm starting to say it at the end of the video. So if you could, where's my fancy pillow here? You could smash that like button, get this information out there, because at the end of the day, that's what I want to happen with this information. I want it to be able to help people and make them understand. And maybe the government starts implementing real things that actually help the citizens instead of all of these. It's just smoke and mirrors and just putting more gasoline on the fire and eating more of the cookies. Excuse me. So yeah, that's the video. And if you would like to subscribe, we'd love to have you as a subscriber as well on the channel. Thank you so much for watching. I will see you at the next video. Signing out.